It's been another whirlwind week in terms of U.S.-China trade headlines moving the markets. How would you characterize where we're at in terms of these nascent talks right now?
This is a classic example of one of the things I say a lot, which is the political time and market time are very different times. The markets wanted resolution and wanted it quickly, and the political and diplomatic process is rolling out a little bit more slowly. But that, I think you have some minor encouraging signs. The tariff announcement is one of those signs. The idea that China may be encouraging greater foreign investment is another potential sign. But bottom line here is, and the fact that USTR Lighthizer is going to run the negotiations from the United States side, I think is another positive. Lighthizer's gotten to yes on NAFTA and on the Korean agreement. He's been tasked to get to yes here. So those are all encouraging. But fundamentally, by the end of March, unless there's actual progress, we're likely to be back where we are. Today, I think the signs are small positives.
Scott, your thoughts on this?
Well, Morgan, coming into 2018, we felt like the two biggest risks were the Fed making a mistake and global growth slowing. And so, of course, the trade situation, the trade frictions play into that. And we do expect some positives. And I think I'd agree with Terry. I think we've seen some positives, whether it was the Xi-Trump meeting at the G20 or some of the news that we've heard in the last few days. I think those are positives, and we do expect progress there. But, this is not going to be easy negotiating like it was really with Mexico and Canada. The EU, China, much tougher, but we certainly expect some progress over time. But I think in the very near term, you'll hear these hints of positives, but I think the market has been conditioned right now to the point where it wants to see something more solid, not tweets on the subject, perhaps, and not just rumors and so-and-so said this. We need something a little bit more solid, I think, for the market to feel better. But I think right now, this overall global growth slowdown, these Europe PMIs weren't very good. That's a big concern.
Yeah, and sort of to that point, Scott, in terms of how investors should be balancing the data coming out of places like China, on the one hand, you have these disappointing numbers, you have signs of a slowing economy that would, I would imagine, give the U.S. more leverage in terms of how these trade talks play out. On the other hand, it's the second largest economy in the world, and we know so much industrial production, raw materials, sales, even for U.S. companies, are tied to that country. So how do investors, I guess, balance that?
Well, for one thing, our economics team has taken a stand where we'll see 6.2% GDP out of China next year. I think that's expected. That's reasonable. We don't think it's going to be any less than that. But I would agree with you where, clearly China is seeing some bumps in the road right now, and I think that is a positive in terms that brings them to the table. You hear the president all the time say that the Chinese want to make a deal, and we firmly believe that they do. So that bumpy road for China, I think in the end makes them more willing to negotiate, but certainly it's obviously striking some fear into the market. And like I said, we've got the trade friction. I think the market thinks there will be some positives there, but this overall global slowdown is really a big concern. Although that's not our base case. We're not looking for meaningfully slower growth in Europe. We're looking for about 1.9 in the Eurozone next year. So we're expecting decent global growth, decent growth here, 2.7 GDP. So, really for us, good growth, not great growth, but good with modest inflation. Stocks should do okay in 2019.
Terry, it strikes me if we hadn't gotten that China data overnight and you came into headlines like China agrees to temporarily cut these auto tariffs that it imposed on a retaliatory basis, you might have seen a rally. So how much of this is legitimate goodwill, do you think, at least until we get to March?
I think a lot of it's legitimate goodwill, Carl. I do. I'm not trying to be Pollyanna-ish about it. But, when they came out of the G20 dinner a couple of weeks ago, fundamentally what was said but on the United States side was, look, we've got an agreement to move forward. China's agreed to engage to talk about the core issues that we care about. That's a big step forward from the United States perspective, and we'll keep doing this. And you're going to see some additional signs, and those additional signs are starting to show up. So those are moderate positives. I quite agree with you about the broader market implications, and I do think the 90-day timetable is very ambitious. But fundamentally, if we get progress, then things will continue. These negotiations will not be easy, but they are moving forward so far, and that's a good sign.